I'm here virtually with Guru Chahal, partner at Lightspeed, one of the more prominent venture capital firms in Silicon Valley. Guru, one of the I guess a big area that you specialize in is sort of technology infrastructure, internet infrastructure, which I think maybe for a lot of our audience is something they don't think a lot about normally. Maybe they don't care a lot about, and they just think, like the infrastructure on the internet is fine. Like I can look at my phone and open Facebook or Instagram and know that it's always gonna, well, except for yesterday, I guess, right? So I think yeah, the massive Facebook outage that we followed yesterday was a good example of why you do what you do, and why you're interested in how technology works. So tell me a little bit about what was going through your mind when it felt like half the internet was down.
Mark, thank you so much for having me. It's a pleasure to be here. And you're right, I've spent a lot of my time thinking about the infrastructure that really underpins all of technology. And the reason I do that is because of two reasons. I'm a geek, and I really love understanding how things work. It's sort of like the person who thinks more about the foundation of the house than the house itself. And two, it's a great market. It's a really, really large market. If you really think about the network infrastructure, the internet, the computer infrastructure, storage infrastructure that just underpins all these things we use on a day-to-day basis, including this application that allows us to talk, that's a $1 trillion market. And so a lot of value creation there. And yesterday, all of us got introduced very quickly to how critical that infrastructure is. So I'll tell you a funny anecdote. I invest in companies globally, here in the US, in Israel, in Europe, as well as in India. I found out through about the outage because I got an email from one of the CEOs I work with who's based in Israel. And I never get an email from this person. I always get a WhatsApp message from this person. And so the alarm bell went off as to what's going on here. And that's how I found out that WhatsApp was down. And just shows you how critical the underlying infrastructure is. And in this case, what happened was it was more of an operator error where somebody apparently at Facebook misconfigured one of the routers that moved traffic around from our computing elements to Facebook's data centers. And so no one really knew how to get to a Facebook data center. And so that resolution of how does your browser get to a Facebook data center got broken, and nothing was working for quite a while.
How would you describe the state of our internet infrastructure? Like what is, I guess, the investment opportunity there?
So the total spend on all of internet underneath consists of about $15 to $20 billion of elements called routers or switches. And they are the ones that really move all the traffic between our devices to data centers, to applications, or to the cloud and back. Over the last about 10 to 20 years, the remarkable thing about that market is it hasn't seen much innovation. And there's, for all practical purposes, only one company, which is about a $25–30 billion company today, that was created in the space called Arista Networks. And they've done remarkably well, but they address one part of the network infrastructure. We are very excited about other parts of the network infrastructure that are seeing increased amounts of innovation right now. And that's thanks to what happened yesterday. So there's an increased need for capacity in the internet and the ability to troubleshoot and keep it reliable. And two, 5G, which is now enabling us to get really high speed, high performance connections through our cellular devices out to the internet. So we're investors in companies like Arcus, for instance, that are rebuilding that part of the what's called the BGP stack, or the BGP protocol, which is really one of the contributing factors to the outage yesterday. So that piece that requires innovation, we're very excited about investing in those things.
So you said the infrastructure is outdated. The folks in Washington talk a lot about fixing our roads and our bridges. Do you think we need an infrastructure bill for the internet?
I'm obviously a prejudiced entity, but I believe we need it even more critically then we need just roads and bridges in some sense. I mean, compare the time, Mark, in the last 1 year that you spend on the internet versus the time you spend on the road. And I think that'll give you a preview of what's going to happen over the next few decades as we digitize, as society as a whole gets more and more digitized. So I think focusing on the digital infrastructure is not just important for you and I, for the federal government, but it's a national imperative. How good we are at that underlying infrastructure will govern how good we are in the competitive stage globally in the future as well. I think the current national infrastructure in roads and bridges, in transportation, in building up our economy has built the nation and given us really a preeminent spot on the world stage, but continued investments in the internet and in the digital infrastructure that underpins our lives on an increasing basis is going to be critical for continued leadership over the next 10, 20, 50 plus years.
Yeah, I'm not sure I would bet on Congress for fixing this one. So for investors, where do you think the fix is going to come from? Is it going to be big companies, small companies?
You know, there's a reason why there are very few companies at the intersection of big and innovative. Like, this just doesn't happen very often, and that's because structurally it's really hard. And of course, management consultants and professors at business schools are going to tell you it can be done, but the real issue is one of incentives. There's no incentive as a big company to take risk or be revolutionary when you can, take an evolutionary approach and net more profit. Innovation comes from small teams of highly motivated individuals where the incentives truly line up. You know, think of the most innovative CEOs that have taken technology companies public in the last few years. I doubt any of them would go and want to do the same thing inside a large company. You just cannot. Startups innovate because lack of innovation is a near-term existential threat. Let me take a brief example. So we're on this virtual conference right now. Last year, when the pandemic hit, so around the Feb-March timeframe, there was a team that used to do technology for physical events, right? So it was a great business. They were selling technology supporting physical events. That business went to literally zero. And in 30 days, the entire team had to retool to take their technology stack and build a virtual event platform. And it's one of the fastest growing teams. And that's the point at where we invested in the team. The name of the company is Hubilo, and they're one of the fastest growing virtual event platform globally today. And that kind of retooling in 30 days, that kind of innovation is practically impossible at a large company because, frankly, that pressure for that kind of innovation just does not exist. So we're extremely excited about the startup ecosystem to go take on some of these challenges, whether it's the infrastructure layer or the application layer. We believe that's where true innovation comes from, because those are the most incented individuals that are structurally set up in the right way to drive big changes in society.
Now I want to take a step back for a minute. We've been talking a lot about your area of expertise, but Lightspeed as a firm invests in a lot of different things. So we have a question from someone in the audience. Tom from New Jersey asks, what is the most innovative space you see right now? Biotech, crypto, and where do you see the most upside?
These markets are so large that at a global level, we track almost every market from crypto to healthcare, biotech, enterprise infrastructure, enterprise applications, consumers, social, media, across every vertical you can think of. And the reason for that is, smart founders who think very deeply about their markets and think very deeply about businesses will always be looking to disrupt those businesses and do something better. So we're at a global level. So Lightspeed is a global partnership. We invest here in the US, we invest in Europe, Israel, India, China, Southeast Asia, with feet on the ground, with investors on the ground. And we don't tie ourselves necessarily to, hey, we're going to invest only in this vertical or that vertical because that's where a lot of the innovation is going to come from. We believe innovation comes more broadly across the entire ecosystem. Now, having said that, I think the two examples that were just pointed out are probably where we are seeing some of the most active and some of the most active innovation going on right now, both in crypto at the blockchain level, at the commerce level, and then in healthcare and biotech as well, at the drug discovery level or in how we deliver healthcare. And we're investors across all of the segments.
So I want to go back to what you were talking about earlier about the differences between innovation inside big companies and small companies. You have firsthand experience with both as an investor, but also having worked on a number of startups, including one that you sold to Cisco and another to VMware. So I think we've all heard a lot about being acquired and what that means for a startup, often for the worse. But I'm curious how an acquisition can change a big company in your experience.
Let me address the second part of the question first, and then I also want to comment on your for the worse comment for the startup, because it's not quite the case in a really good acquisition. So let me start with how can an acquisition influence a large company? And I think there are three key benefits here that, when done right, the acquisition accrues to the large company. One is the business, right? So you're acquiring revenue that might or might not be accessible to you as a large company. So I'll give you an example. You mentioned I've sold two companies over the years, one to Cisco and one to VMware. If you take the VMware example, there was a company called Avi Networks in the cloud infrastructure space. That company sold a product that VMware just simply did not have. So by acquiring, the first benefit was the business. So there's tens of millions of dollars of revenue or top line that accrues immediately to your top line. The second benefit is talent. A couple of hundred really entrepreneurial employees, great engineers, marketeers, sales reps, they all got acquired as part of that transaction into VMware. And that's amazing talent, especially in a tight hiring market. These kind of entrepreneurial leaders, these kind of engineers, these kind of sales reps, it's exceedingly hard for a large company to go out and hire them on their own. So an acquisition like the acquisition of Avi by VMware can really accrue massively to the talent base. And then the last thing, and probably the most important one, is goodwill. If you really think about the acquirer, from an acquiring company's perspective, they get a huge benefit from taking innovative, well-loved new products to their existing customer base. And so the existing customer base looks at them as a more innovative company than they would have if the company was showing up day after day after day with the same set of products. So I think you benefit from having bought the business, the actual revenue, you benefit from getting amazing talent, and then finally you benefit from having an innovation halo around you, so your existing customer base really looks to you for innovation rather than you losing account control and and the customer really going to other more innovative companies.
That makes sense. I want to take another question from the audience. So this one is, speaking of innovation, what are your thoughts on quantum computing and its near-term impact on internet infrastructure?
I think quantum computing impact represents one of the biggest leaps in computing we've done basically since the dawn of computing. However, as an investor in private markets, we tend to watch very carefully where a technology has taken the leap to be ready to be converted into a business. So there's often in technologies, there's science risk. After science risk comes the risk of actually producing it. And then the risk that, hey, do you have the right use cases pinned down so that the customers really see value and you can create a business around that by selling that particular technology. With quantum computing, our questions are largely around at what stage is it ready to address mass market use cases. And so we're tracking it very carefully. We're pretty excited by the potential there. And we are in touch with a lot of the top startups in the space. We're not active investors yet in one of the quantum computing startups, but it's a space we're pretty excited about.
So you were a VC at Lightspeed years ago, and then you found a team that you liked so much that you mentioned earlier, Avi Networks, that you quit your job to go work with them. What do you, I guess in that example, and then maybe we'll talk more generally, what do you look for in a startup that is so inspirational that would make you want to take that leap?
The most important thing about any team you ever work with, as you know, Mark, is the people you work with, right? If you're excited about going to battle every day with your colleagues, taking over the next hill, having a big mission in mind and being confident that you can trust them and you respect their skills and they are committed to the mission, there's nothing better than that in life. That's the first thing I look for as an investor in the teams that we invest in. That's also what got me super excited about joining the team at Avi. This was an amazing team I'd known for a few years. When they were leaving Cisco and looking to start their next business, we got talking, and it didn't take very long for me to go, you know what, I want to go to battle with you guys. Like, this is really amazing, and they felt the same way. So it starts with the team. The next most important thing is the market that you're taking on, because if the market's not large enough, it just becomes really difficult to attract great talent, because great talent wants to have true impact. That's, I mean, if you ask yourself, why do folks ever join a startup? Why give up a nice, relatively safe, high-paying job to go take risk at a startup? And that's because they want to have an impact. And unless the market size is large enough and you can impact businesses and individuals in a way that really sort of makes you feel like you did something that was outsized and over and above what you might be doing deep inside the bowels of a company like Google or Cisco or an HP or a Facebook, they would never come. So I think those are the two big things I look for. That was what got me excited about Avi as well. Amazing team and a really, really large market. In fact, I guarantee, Mark, that your lives, as well as most of our listeners today, Avi's technologies have impacted their life in some way or the other. I mean, the customers included some of the largest websites on the planet, and it's quite possible that the next time you log into your banking website or application, or the next time you buy a car online, or the next time you do your taxes online, it's quite likely that the technology underneath that's making that possible is Avi Networks technology. Now, when you have that kind of mission, that kind of big vision, and that kind of impact, it just makes everything easier, including hiring.
Is there a third criteria that you think about to avoid like a potential disaster scenario? Like you think of Theranos, it's like blood testing, big market opportunity, inspiring, magnetic entrepreneur, or WeWork, like commercial real estate is huge, and the entrepreneurs like really has a lot of people who want to follow him around. Like, what is there a third criteria to avoid the pitfalls?
Yeah, so I spoke about the team and the market. There's actually two more, which are very connected to the example you just gave. The first one is technical diligence. From a technical perspective, can we speak to enough experts to convince ourselves that this is doable? That we're past, let's say, a science risk or some sort of an R&D risk that is extremely binary in nature. From a venture perspective, certainly that's a kind of risk where we want to go in with our eyes wide open. And then the fourth thing is really, does the business founder, that combination, does that make sense or not? And in case of WeWork, I fundamentally believe that businesses like that have a place. I mean, that's why the underlying idea of having small remote offices or environments where employees can go and spend some time made sense. In fact, at my last startup, other than the office in Silicon Valley and two other remote offices, all of our other offices were small spaces leased from companies like WeWork. So the idea makes a lot of sense, but at the end of the day, the business metrics have to make a lot of sense as well. So those are the four things we look for, not necessarily in that order of priority, with the team, the market, technology/science risk, and then just the underlying business fundamentals, unit profit, gross profit? Does the underlying business give you the potential to really disrupt the market in a big way? I think those are all things we are very careful about leading into.
Okay. I want to take another question from the audience, which is back to infrastructure. What private investments can be made to make internet infrastructure more resilient? Is there a market specifically for this?
Yeah, so the underlying infrastructure, there's about $40 to $50 billion spent every year just between telcos and large enterprises on getting the internet to work. Those are big hardware devices, routers and switches. They're also software that actually manages that infrastructure, troubleshoots and diagnoses when problems happen, just like yesterday and so on. So we are very active investors in this space. I'll give you a couple of examples. There's a company in our portfolio called Arcus. Arcus today ships one of the highest performance internet software in the world. So that operating system is used today by telcos and really large web-scale enterprises to run their networks. So you can imagine as more of that kind of technology, extremely resilient, extremely high performance, makes it into the larger internet, the internet as a whole continues to get better. We're also investors in companies that are making last mile connectivity a lot more resilient. So companies like Celona, which is making 5G connectivity and or using CBRS, which is a particular band of radio communication, utilizing that to provide high performance connectivity to devices. We're investors in companies like Infiat that actually make this communication a lot easier to do because they provide high performance last mile connectivity to remote workers. So we're extremely bullish on investing behind companies that are making the overall network infrastructure better and more resilient, and we believe it provides a big opportunity for value creation.